Hey everyone, welcome back to the channel. My name is Winston, and for this video I'm going to be talking about compound interest and how you can use it within Forex trading. I'm going to be talking about what compound interest is, how to use it in trading, and I'm going to be talking about the pros and cons of Forex trading. So let's go ahead and get started with the video. Alright, so I wanted to go ahead and start off with a definition of what compound interest is. So I went ahead and searched it on Bing. So as you can see, it says compound interest is interest that applies not only to the initial principal of an investment or loan, but also to an accumulated interest from previous periods. This means you earn interest on your interest, and that's going to be the key thing for this video. You earn interest on your interest, allowing your money to grow at an accelerated rate over time, unlike simple interest, which is calculated only on the principal amount. For example, if you invest $100 at 5% annual interest, after 1 year you would earn $5 in interest, and the following year you would earn interest on the new total of $105. So now that we know what compound interest is and how it works, how can you use this within trading? I'm going to go ahead and create a couple of examples of how to use compound interest within trading. I'm going to go ahead and create a expert advisor and show some results on how it can work with how you can trade using compound interest, and I'm going to also show some results on how you can trade without interest, which will be the simple interest. So I'm going to go ahead and sign into my account and get started on this. Okay, so I went ahead and just copied a expert advisor that I already had made. So what I did was copied it and named one under simple interest. So under the money management for the simple interest is going to have a fixed lot size, and I did make this as an input setting, so I can change the amounts that I want. But I'm going to start off with a fixed lot size for the simple interest, and as the EA will trade, it will just continue to trade using that fixed lot size. Then I went ahead and created a compound interest expert advisor. Under money management, I will be using risk percent per trade. So, and I also made that an input setting as well, but for the risk percent per trade, it will risk 1% of the account. So whenever the account grows in value, it will continue to increase the lot size. I also wanted to mention that for the compound interest expert advisor, whenever there are losses experienced and the account decreases in value, the lot size will get smaller. Okay, so here is the test result for the simple interest expert advisor. So as you can see, I used the Euro USD, the USD JPY pair on a period of 15 minutes. And I did the every tick model, and I went ahead and set the parameters. So as you can see, the total net profit from a $5,000 account was $2,168.85. And you can go ahead and look at some of the other stats on there as well, as far as the gross profit. The gross profit was $7,385.78, and then the gross loss was $5,216.93. So with the simple interest expert advisor, it made a 43.3% profit. And then as you can see, the lot size that it started with and it continued to trade with was 0.45. With the compound interest expert advisor, I used the same pair, same time frame, same stop loss and take profit levels, and it made a profit of $2,233.03 profit. And that ended up to be a 44.7% profit. So it was only a profit difference of 1.4%, but as you can see, it's still it still made a greater profit than the simple average. And the thing with the compound interest is over time, your profits will continue to grow and grow and grow. So your profits will be higher. And for the compound interest expert advisor, I made sure to use the same starting lot size. So it started out with the 0.45 lot size. The max lot size that it got up to was 0.75, and as you can see, it returned to a lot size of 0.67. Okay, so now I want to go over the pros and cons of both simple interest and compound interest. So I went ahead and put it in Google to see what it would give me, what results it would give me. And one of the results was for the pros of simple interest. It's easy to understand and calculate, predictable returns and payments. So with the predictable returns and payments in Forex, I guess your swap would be calculated the same since you're going to be using the same lot size. And the swap is the charge that you would experience if you keep a trade open during the next day. Lower borrowing costs and is suitable for short-term trading and investments. And then it also gave some results of transparency, stability, and clear impact on return on investments. And I think as far as stability, the forex market is very volatile. So there are going to be times where a news event will occur, and all of a sudden it goes like if you have a trade open, it goes in the complete opposite direction of what you expected. So I guess in a sense, in that case, the simple average would be a major pro. As far as the cons for the simple interest, in trading, slower wealth accumulation is not ideal for long-term investments. It's limited impact in raising interest rates environment. So yeah, it gives like a list of cons. I guess the slower wealth accumulation is just because the lot size never increases whenever your account increases. So you're not really beating inflation because that's one of the major things about compound interest in trading. You will be able to beat inflation if you are constantly increasing your lot size as your account grows. And then some pros of compound interest. Of course, you have the exponential growth potential, increased wealth accumulation, and outpacing inflation, which is what I just talked about. So, as your account grows, lot sizes will grow, and you can actually beat inflation. And on the flip side, for the cons, you do have increased risk exposure, and then market volatility, which kind of goes back to what I was saying about if there's a news event that happens and your lot size has been increased and it goes in the opposite direction, you will lose a whole lot more versus on the simple interest. All right, so that is going to be the end of my video. I hope this was informational for you, and I hope that you all can take this information and apply it to your trading strategies. Be sure to give this video a like, comment, and make sure you subscribe, and make sure you put any questions down below. Take care.